Now, how much are the damages? People are wondering what's the damage and how is it going to impact everybody else as well?
So first, it's important to distinguish between economic damages and insurance losses, because not every property is insured, and a lot of public infrastructure is not insured. The government self-insures. So the estimates now are as much as $150 billion of economic damages or losses from these fires. The insured losses are estimated to be as much as $20 billion. That's a big number. When you think about the wildfires in California in 2017 and 2018, those were about $15 billion each, including the Camp Fire in 2018. So $20 billion is an enormous loss for the insurance industry to have to sustain. Why is that number so high? Well, first, 12,000 structures and counting have burned. So that drives that loss number up for the insurance industry. But also the values of the homes and businesses in Los Angeles that burned are very high. Pacific Palisades is some of the most valuable real estate in the nation. And so that means to the extent the insurance companies are insuring those properties, they're going to have even higher losses because the insurance policies cover larger amounts. I think the other important thing to note, though, is thanks to California's strong insurance regulation, the insurance companies have enough money to pay claims. A part of insurance regulation and strong insurance regulation is making sure that the companies are collecting enough money in premium and then setting enough money aside so that when these catastrophic events occur, there's money to pay claims. So the insurance companies here in California have enough money to pay claims. They have big enough reserves. Also, the other important thing to note is that we have an insurer of last resort called the FAIR Plan, F-A-I-R. That stands for Fair Access to Insurance Requirements. And it has sufficient resources to cover claims as well, although it's a little more complicated because it has 200 million reserves, 2.5 billion in reinsurance, which sounds like a lot, but the amount of exposure that the FAIR Plan has in Pacific Palisades alone is $5.85 billion. It's written $5.85 billion worth of insurance policies. Now, not all the homes that were destroyed in Pacific Palisades and Altadena and other parts are covered by the FAIR Plan, but some are, and enough of them might be covered that the FAIR Plan would exceed the amount of money that it has to pay claims. So what happens then? Well, like every other state, what happens then is the FAIR Plan can then assess member insurance companies. But what's different in California from the general rule is that they can also assess all policyholders in the state of California, thanks to a change in the rule last year. So the bottom line is the FAIR Plan will have enough money to pay claims too. People don't need to worry that it's going to run out of money. But the way that it's going to make sure it has enough money is by assessing all California policyholders eventually if it reaches the point where it has insufficient funds to cover those claims itself.
So do you anticipate, this payment, all policyholders probably have to chip in for this if it gets there?
If it gets there, that's what will happen. And that will be on top of what homeowners and businesses are paying for their own insurance, which is anticipated to rise in price even before these fires. With the regulatory changes that were enacted last year at the request of the insurance companies, those changes were going to allow the insurers to get a lot more rate increases. Then we have these fires, which they're going to use the experience from to ask for even more rate increases. And then you've got this potential assessment from the FAIR Plan on top of that. So it's going to be, sadly, very expensive for Californians to continue to access insurance going forward. Will insurance continue to be available? We hope so. All of these regulatory changes were made at the request of the insurance companies. When they were made last year, the insurers said if these changes were made, they would keep writing insurance. So I believe they should maintain that commitment, but we'll see what they do.
And now for those people that have been impacted, what does the insurance cover?
A couple of things. One is most home insurance policies have what's called adjusted living expense, which is basically coverage for your out-of-pocket costs when your home is destroyed such that you can't live in it any longer. So things like motels, buying food at a restaurant, purchasing clothes, those sorts of things. So those individuals who have lost their homes, who have insurance, ought to contact their insurance company and see if they can get some of that money into their pocket right now to begin covering their costs associated with their being pushed out of their homes. Then the other thing that insurance policies typically cover, up to some limit, is the replacement of the home. And here it gets confusing for people because people oftentimes think about the market price of their home and they insure to that amount as opposed to insuring to the replacement cost of their home, which can be a different amount, in some cases higher. So one thing people should do when they have insurance is double check every year to make sure they have enough insurance to cover what it costs to replace their home. Individuals who lost their homes in this particular set of fires who have insurance will have coverage up to whatever limit is in their insurance policy. Some of these people may be underinsured. In other words, they may not have purchased enough insurance to cover the replacement of their home. If that occurs, sadly, they're going to have to look for other resources to make up that gap. The other thing I think it's important for people to understand is that FEMA, which provides disaster assistance for communities in the wake of these sorts of disasters, they don't help you rebuild your home. At most, maybe you get $20,000, $30,000 from FEMA to help you with emergency assistance. But it's really insurance that you need to have to enable you to recover from a horrific event like this.
Now, for the people that are on FAIR Plan, we have heard that it only covers up to $3 million. Can you tell us, is that true?
Yes, that's right. The FAIR Plan has a coverage limit of $3 million. And so if you're in Pacific Palisades where the average price of a home is $3.5 million, of course, some of that is for the land and location, but some number of those homes will probably exceed the FAIR Plan coverage limit. What folks should have done is if they had to go to the FAIR Plan and the coverage limit of $3 million was less than the overall replacement cost of their home, then they should have bought some insurance on top of that from what's called the surplus lines market, which is a basically unregulated additional insurance market. Think Lloyd's of London, Zurich, companies like that. But sadly, some number of people are probably going to be underinsured, which means sadly they won't get enough money to cover the full cost of replacing their home. And that's a tragic thing, and sometimes it even forces people to decide they may not rebuild. That certainly happened in the Camp Fire up in Paradise in Butte County, where some number of people didn't have enough insurance, they couldn't rebuild, and so they decided, well, we're going to have to move, and they would sell their lot to someone else.